As we begin the month of July, the Indian startup ecosystem saw a sharp decline after seeing an increasing number of fundraisers week on week in the month of June. But having said that, there have been reports during the rounds which says that we have potential 122 unicorns from 25 different cities across India. And not only that, we're seeing a lot of VC firms raising additional funds, which at the end of the day will be deployed back into Indian startups. And of course, the pace of digitizing Bharat has really picked up steam. There's a lot more to discuss in this week's roundup, so we'll get started. Welcome back to the Startup Operators Weekly Roundup. The Weekly Roundup is a show for people who want to stay updated with major developments of the Indian startup ecosystem. If you're new to the podcast, please do consider subscribing and sharing it with folks who you think will enjoy the show. Roshan, a brand new month and a brand new quarter. How do you think this quarter will be?
I think it could be interesting for sure. And, I just noticed that this is a 75th roundup. So it's kind of a diamond jubilee for us, huh, Gunjan? It's been fun bringing you all of the news and events of the week. I'm a lot more optimistic now than, of course, when we started. And that optimism is also because of a few fundamental things that have happened, right? I've always maintained that this feeling that India as a DAO market will definitely change, right? I mean, obviously, as per capita income goes up here, as internet penetration goes up and e-commerce becomes a lot more simpler, you're going to have people spending a lot more, right? And I was reading this interview of the Nazara Technologies founder and Nitish Mittersain, and he was saying something like that, saying that in the next 4 or 5 years, India will become perhaps top three or top five country in terms of spending. And if you look at some of the monetization journeys of Kuku FM, who crossed I think 1 million paid subscribers, which was like a 27x growth in a year, or Pratilipi, or the others, Stage, for example, that we've had on the podcast. This there is this feeling that desh badal raha hai, right? I mean, the typical feeling of things are changing. So yeah, a lot to be optimistic for. Yeah.
Yep. But recently, I don't know, I think I was reading some blog, okay, and blog was about how MAUs or DAUs, right, are kind of very skewed metrics towards measuring how sticky your product is. Because even if you look at the people who are the active users, right, there's a section of them who are just, using the platform just to get a hang of it or just to explore what the product is. Basically, like there are new customers and then there are loyal customers, right? And the way we are moving towards sassifying everything, I think this is something like product folks and is something like they should good to have in mind. So it's a pretty
Yeah, I mean,
interesting.
I
I
think
might
we've
want to read.
moved beyond DAO and MAO metric. I think, any sufficiently large enough startup today, I mean, looks at more mature metrics, whether it is goals completed or certain sequences or, certain outcomes or whatever, right? So I think, yeah, I mean, product for sure, I mean, looks beyond these DAO and MAO metrics. I get the feeling it's very 2012-ish when people talk about that.
Yeah. All right. So, when June started off, I think in one of the rounders we discussed that, the government is setting up a panel to study the reasons why EVs were catching fire, right? I mean, we saw the likes of Ola and many different other two-wheeler companies, the battery packs catching fire. And the report will be soon coming out, but they have already started notifying OEMs about basic safety systems. The experts have identified that the battery management systems, right, of the two-wheeler EVs was seriously deficient and they lacked even the most basic safety norms. The major one being that none of the OEMs put in any venting mechanism to deal with the overheating of cells to let off the heat. And I think we discussed this earlier. Where do you think that OEMs should balance out on maintaining the demand from the market? Because we have seen the tremendous rise of EVs, but at the same time maintaining the safety features because it'll be like inversely proportional, right? If you want to make it more safe and like go it through like proper testing, it's going to take time to market. But if it's taking time to market, how do you sustain the capital needed to fund the R&D? What's your take on that?
See, it's a mix of being early in the innovation cycle, plus having hard and fast regulation about a lot of things, plus also being in a country that has perhaps some of the lowest automobile safety standards in the world, right? I mean, we've seen this even for conventional automobiles as well. See, the EV market has been 20-25 years in the making. People think it's a recent phenomena, but no, I remember when Chetan Maini launched Reva in the early 2000s. It was quite something. It just looked like out of a movie, very very different from all the sedans and the hatchbacks that you had on the road. It was kind of funny to look at, but it really piqued everyone's interest. And then you had a few people kind of importing these Chinese vehicles and so on, and selling them here without any support or maintenance and so on and so forth. It only took till I think 2012-13 when serious players like Aether and Ultraviolet started building EV. And also, I mean, you can think of it as tech itself evolving. Today the battery tech that we have is insanely more powerful than what we had 15-20 years back, right? I mean, you've you've seen that with phones, for example. I feel the standards also have to evolve to keep up to these rises in innovation, and it's good that the government is kind of looking at this. I feel that once regulation is specified, entrepreneurs are more likely to kind of adhere to it. Right now, I think everyone is operating in this very ambiguous area, and in terms of adoption, I think every bad apple right now will cause a setback to the ecosystem as such. So, I really hope that the OEMs take this seriously, because early in the adoption curve, these are things that kind of set people back, right? I mean, and it's become living room news everywhere, right? I was just talking about EVs the other day at home, and my mom's immediate reaction was, "Hey, I hope you don't buy any one of these things. I mean, they're catching fire everywhere." If it's
All
reached.
the progress that we're making, I mean, all the hard work that's going is just being set back by 1 or 2
Yeah, I
years.
mean, it kind of gets set back, right? I mean, if that is the prevailing sentiment. So it's good that the government has kind of stepped in and, is defining some of these regulation, because it's very important. And I think similar for, other new up and coming industries as well, right? Blockchain, crypto, etc. I think it's good that the government comes and clears the mess.
I mean, yeah, of course, these are serious concerns as manufacturers come up with only minimum functionality and taking shortcuts rather than prioritizing vehicle safety. But last week also, Matadon, which is a Ahmedabad-based electric mobility startup, they raised $10 million in its latest funding round from Info Edge-backed 2B Fund, Climate Angels Fund, and other marquee investors to launch its first EV motorcycle later this year. And of course, they're claiming it that this will be setting new benchmarks in the two-wheeler industry. Earlier, they had also launched Matter Energy 1.0, which is an active liquid-cooled two-wheeler EV battery, which is kind of suited to better address the conditions of thermal management in India. Now, I remember we had interviewed Narayan and Neeraj of Ultraviolet. Yesterday only, I think I came across a video by Zig Wheels, and they were like kind of doing a deep dive as to, hey, why hasn't Ultraviolet launched its bike yet? It's slated to come in 2021. And in one of the interviews, Neeraj was saying that, hey, we take our bikes out for real world testing in like places like Hampi, Chikmagalur, and all. And the testing teams comes up with like insane testing strategies. Like one thing that stood out for me, they wanted to test whether the bike can go up the stairs, not come down, but rather go up the stairs, so like managing torque, traction, and all. There are some companies which are actually translating what the consumers need, what the Indian conditions need, and what sort of challenge that actually poses the engineering team to solve for that. So I mean, it's just insane, right? And the amount of innovation that's coming in is like wow.
See, it's super difficult right now to build, right? Because you don't have precedents to leverage on. The automobile industry has been 100 plus years in the making. Whereas, I mean, if you look at EV, as I mentioned, it's 20 years. And even within that, in India, it's even more nascent. So if you don't have the standards to leverage, I mean, you have to build everything in a full stack manner. It's going to take time. Ether is a 10 plus year old startup. Ultraviolet is a 10 plus year old startup. It's not something where, you can just swoop in with an MVP and capture market share and so on, right? I mean, that we've seen what has happened with people who have tried to do that. So yeah, I mean, all the best to all of the serious OEM players.
So I think earlier this year, Mr. Piyush Goyal had stated that we'll be reaching 100 unicorns by the end of the year, and of course, then we went through all these tumultuous times where the whole funding winter set in and funds were drying up, startups were laying off people. But last week, Hurun put out a new report which states that there are 122 future unicorns in India, which come from 25 different cities. And over the course of the next 4 years, India is expected to have 200 unicorn startups, which is the increase from 122 from the current number. And the potential valuation of these unicorns stand up close to like 49 billion, which is up 36% from the previous year. Now, there are a lot of startups on the line, and they've categorized these unicorns as gazelles, which will be turning unicorns in less than 2 years. And they include the likes of Turtle Mint, Aether Energy, Agritech startup Ninja Cart. And then there are cheetahs, which will be turning unicorns in the next 2 to 4 years. And they include the likes of Pepper Fried, JustPay, QMath, and even Sugar Cosmetics. Now, this is interesting, right? A lot of, I mean, it's all fitting in together now. The VC firms are raising money. That money needs to go somewhere, as you rightly pointed out in a couple of roundups back. And now we have a report backing up what you said. So, like, yeah, actual Akashwani is working out well.
Yeah, I mean, the genie is out of the bottle, right? I mean, with Indian startup ecosystem per se. I mean, there is huge aspiration among the large demographic of India, right? We have the largest young population in the world, right? People under 35 years. Typically, this is a population that's most akin to taking risks. And now we have risk capital as well supporting these aspirations. And function of both of these, combined with the fact that, we have a very broad base of technology skills, owing to decades of, producing engineers, makes it so so lucrative that it's just bound to happen irrespective of financial cycles, right? And we'll discuss some of this, during the talk of the town later. So, 100, 125, 150, it doesn't matter, right? I mean, the fact is that it's just a secular trend forward. And, we may quibble on numbers in terms of whether it'll be 100 or 150 or 175, right? But the trend is like, positive, and it's only one way. I mean, it's going forward for sure. We've had 180 plus episodes on the Startup Operator podcast. We've spoken to so many talented founders, and each of those folks seem like, they have their stuff sorted and they're headed towards that magical unicorn valuation, right? Although, I mean, I would say a fair number of them don't even care about that unicorn valuation as such. I mean, they're just building fundamentally solid, sound businesses, and they're solving legit problems. Look, I've always said that India is such a large and complex nation that, we'll have to solve some of our problems through innovation than institutions, and startups are playing a very key role in that. So I really feel that 2020s is India's decade because of a lot of structural things that have happened, whether it's the formalization of the economy, whether it's the whole digitization through, and plenty of these frameworks like account aggregator, ONDC, the national health stack, which is going to come up, and so on. All of this put together, I think you'll have, massive payoff this decade, and also going into the next decade. So we're looking at, all said and done, we're looking at another 20, 30 years of building to be done, I would say.
Wow. I think we're done way before that. Also, having said that, last week, Bertelsmann India Investments, which is a sector agnostic venture capital fund, they have earmarked $500 million for a new and a follow on investment in India. Now, with this fresh fund allocation, Bertelsmann kicks off an early stage program under which it plans to make at least 3 to 4 Series A investments in a year, and which will be in the range of anywhere between $2 to $5 million. They're also planning to focus on investments in the health tech, enterprise tech, and future of work spaces, and along with Web3 for the upcoming 2 years. I know Bertelsmann Investment had invested in Vimo as well, and now another venture capital raises funds despite the funding winter, so to say, right? Let's hear your thoughts on it.
See, we've been seeing this, right? I mean, Sequoia, Prime Ventures, Axel, everyone has raised new funds, and obviously these funds are going to be deployed in the next 2 3 years in India. So it's very good for Indian startup ecosystem, I would say. Bertelmann has been, it's a conglomerate, and they have been investing in VC startups since early 2000s. They started out in India around 2013, and since then they've, as you pointed out, they've made very sector agnostic investments, right, across different spaces. Like they've invested in Pepperfry, I think, and Savan, which got acquired by Geo, and then Licious as well, and then Vimo, right? Now, all these 3 or 4 companies that I mentioned are extremely different, and that is the way forward for them as well. I mean, they're looking at, fundamentally good, sound businesses, irrespective of what sector it is. The point you make about enterprise tech is particularly interesting, right? I mean, I've said this over and over again that for 20, 30 years, we've been building the back end of businesses through services, right? Whether it's through Infosys, TCS, Wipro, Mindtree, whoever else, right? I mean, we've been building the back end of these large applications that enterprises use. And it was only a matter of time before we kind of, started becoming the front end of something. And before we started productizing, the lament used to be about 10 or 15 years back. They used to call us software coolies, very derogatively, actually. Not outsiders, but our own people, right? People,
BPO office. You're like a BPO office.
yeah, the back office, and this
Yeah.
and that, right? I mean, hey, but give it enough time, right? I mean, I would always say that, just give it enough time. This is a curve. I mean, you can't go from 0 to 100 instantly, right? I mean, it has to follow a certain curve, and that's what you're seeing right now. A lot of the applications in enterprise SaaS or even tech, even mid market or SMB, right? Indian applications are as good or even better than some of their multinational counterparts, right? And I think there's still a long way to go for us in terms of maturity. We still do have to understand a lot more of sales and marketing and all of that stuff, branding and all of that. And I think we'll catch up on that front. Maybe 2 cycles, maybe another 15 years or so. I think we'll be as good, if not better. But we're already there in terms of the technology capabilities and so on. I used to always have this question in my head. A large percentage of folks in Silicon Valley, for example, are Indians. A large percentage of folks in NASA are Indians. Why are we not doing this in India? Of course, I mean, when you go down that rabbit hole, I mean, you get into things like the ecosystem is not supportive enough and money and things like that. And with those things kind of catching up right now, I mean, you will see that Indian talent will start building in India. So I'm very, very bullish on that.
Yeah, no, that's a very great point, Roshan. And folks, if you enjoy understanding more about the Indian startup ecosystem in this manner, do consider subscribing to our channel and following us on your favorite podcast platform so that the updates are directly shared with you. Coming back to what you said, I think one of the reasons why we are here today, like further down the curve, is also because the way the government has been working collaboratively with the startup, and together they have come up with like some of industry standards. For example, the ONDC, as you mentioned, we have the UPI, right? Which, and now we are exporting UPI to other countries. And I think the next biggest thing for us will be this whole account aggregation, considering that more and more people are entering the formal financial sector, and things like account aggregation, which is like consolidating all the financial information in one place, will provide us the next boost in our progress. And with account aggregation, all your loan credit accounts, savings and current accounts, credit cards, investment accounts, government accounts like your PPF and IT return data, all of this will be in one place. And when this happens, we just moving away from simple asset backed lending to more data driven lending, and so this can better serve individuals, MSMEs that were earlier underserved by the financial services. So pretty
Oh,
exciting, I'd say.
absolutely. I mean, it takes financial inclusion to another level. Account aggregators framework, is fairly simple. I think multiple people have blogged about it, tweeted about it, and so on. Your financial services data is with multiple companies at this point of time, and when you seek new financial services, you have to do this whole dance of taking all of your either bank statements or whatever else records and assets and so on and so forth to this new entity, and then proving that you are actually worthy of credit or worthy of whatever their services are, right? Account aggregators framework simply says that every entity that is serving you right now is liable to give this data to you, and with your permission you can transfer that data to another entity, right? Think about a situation where you are applying for a loan. Rather than be limited to the three or four or five providers, five is a lot actually. I mean, people generally compare like two or three at best loan providers for you. I mean, you can look beyond that, right? And what's more, I mean, other financial services entities can actually compete for your business, and all of this does not have to be restricted to the three or four options that you have at this point of time. So what will be even more interesting is when this goes beyond financial services itself, right? Like, for example, telecom or healthcare and so on. With the data protection bill coming in, I mean, all of these different entities operating in other sectors, right, healthcare and so on, they've all been asked to be mindful about data, right, and do something in terms of data sharing and so on. My feeling is that they will all evolve something like an aggregators framework anyway. This was an initiative by the RBI, and it's amazing that we are sort of going about it the API way, right? Makes things a lot more scalable. It'll be interesting to see how this scales beyond finance itself. But yeah, I mean, simply phenomenal stuff. Again, I mean, we're in the very early stages. There are about seven entities right now. I think the others will catch up. I mean, it'll take time, I suppose, but sooner than later, I mean, we'll have the rest of them as well. This could be really interesting, because one thing that we've often said is that India is a very credit starved nation, right? Our actual credit needs are not being met. Multiple reasons for this. One is that obviously we have a large informal economy, we have a very nascent financial services sector. So there's a long way to go in terms of both of these. And, account aggregators framework will definitely speeden that process up. We'll get a lot more cheaper, more effective financial services in the days and years to come, for sure.
So yeah, on the back of that, also I said that how the pace for digitalization in India has just increased, right? And last week we had two other startups who are helping SMEs and MSMEs digitalize themselves raise funding. Sourceways, which is a B2B digitization platform, they raised 20 crore rupees in our funding round led by Matrix Partners, along with a couple of angel investors. And they work with exports in digitizing their entire sales and marketing operations, and that includes processing the product design, cataloging, quotations, invoicing, and even trade show management. Currently, Sourceways operates out of Panipat, Agra, Jaipur, and Karur. And what's interesting about that is that these are all major export hubs. Think of like a chickpet in Bangalore, right? Imagine chickpet going digital. What it may lead to in the future, right? Going at that scale. The other one is Arzu, who raised $70 million in a new funding round, backed by both global and Indian VC firms. They included the likes of Japan's SBI Investments, Trifecta Leaders Fund, and DoorDash founder Tony Zhu. This is Zhu's first India investment, and I think Arzu's last funding round. Zoom's founder Eric Wan had also invested in the company. Arzu not only is digitizing storefronts, but also, being a marketplace for various players, and also has a financing vertical as well. So all of these digitization companies, they are like full stack companies by themselves, managing operations, supply chains, and value chains for the customers end to end.
Yeah. No, I think that's a very relevant point that you bring up, right? See, the companies that we're seeing right now, the startups that we're seeing right now are no longer just content connecting buyers and sellers. That used to be the case around 20, 25 years back. These folks are layering everything, right? They're layering the platform with software, with financing, and so on. And we've had plenty of folks who do that on the podcast as well, right? And it's three or four businesses by itself. I mean, off business, for example, its financing arm itself is a unicorn, right? This whole B2B commerce is a legit phenomena, right? I mean, you have so many MSMEs in India, and you have so many commerce hubs and commercial districts and so on and so forth in every nook and corner in India. All of those are waiting to be digitized, right? And these folks have a, like, for example, Arzu focuses entirely on consumer durables and electronics and so on. And these are ex Flipkart folks who have started Arzu. So you will have similar folks making these kind of platforms to digitize B2B operations, I would say. It's a damn good thing. I mean, I think with the ONDC framework coming in later as well, you're going to see this market instantly sort of explode by 4 or 5 times, which means that right from your vegetables seller to some foundry shop to clothes manufacturer in Jalandhar or somewhere, all of these folks are now online and all of these folks are now accessible as well. So really exciting times.
Yep, for quite a number of times you've spoken in the roundup about Google's predatory practices, right? And last week, Deepak Abbot of India Gold put out a tweet again expressing his frustration how, without any notice or any intimation, Google Play has just terminated some of their App Plus development account. And Google has been coming under the lens in quite a different job because we had seen that in Australia, we had seen that in Europe. And last week, in an attempt to settle a class action lawsuit and avoid years of litigation, Google is offering Android app developers somewhere in the tune of $90 million in compensation. The lawsuit was filed way back in August of 2020, which accused Google of improperly attaining and maintaining a monopoly in the US markets and also, quote unquote, prevent competition that would benefit all Android app developers. When this heat started coming in towards Google, they made a couple of changes in their policies in which they dropped the app commission rate from 30% to 15% for the first $1 million in annual revenue earned through the Play Store. And it's also trying to clarify certain points of its developer distribution agreement to make it clear developers can communicate with users outside of their apps using information obtained from the app. Again, this just seems murky, but again, I'm not an expert into it. But there are actual people who are suffering because of it. What do you think?
I mean, it's very frustrating because I've dealt with Google as a business user, and it's really really frustrating, right? And we've said this earlier that Google, perhaps big tech in general, has to take India a little more seriously, right? I mean, if they're going to be relevant here. But it seems like these kind of things keep happening, right? I mean, India Gold is doing some fantastic work and their developer account got suspended. There was Cuckoo FM, which the app was thrown out of the Play Store just before their series funding. Then there was Ava's app again, which suffered something similar, right? I mean, I know 3 or 4 instances like this myself, right? And we don't even want to go into what kind of apps or services get promoted, right? And we don't want to look at the ranking algorithms and promotions and so on, right? It's very very opaque, and there's almost a Chinese wall across all of these things, right? In general, we are focused on big tech, the way it treats users and consumers, right, in terms of data privacy, security, and everything. But if you look at the way it treats businesses, it's as bad or even worse, I would say, right? Support is inexistent or almost always delayed, right? I mean, you write an email, you get an email response back in like, I mean, of course, you get an automated response, but any real resolution takes like days and weeks. The processes are very opaque. The redressal for any of this stuff is like really complicated. And it's just downright unfair, I would say. It's like a take it or leave it kind of culture, right? And we've seen this. If you're an advertiser on any of these platforms, I mean, you kind of know what I'm talking about. So I feel that some kind of regulation is imminent. I really feel that either, the Startup India or Digital India folks or the Ministry of, IT takes cognizance of this, because now with all of the businesses moving online and with e-commerce becoming prime and center, we definitely need better redressal for sure, right? I would really really hope that big tech kind of recognizes this themselves and fixes some of this stuff. But if not, I mean, I think regulation is long due, I feel.
Earlier, back in 2020, right, I remember Vijay Shekhar of Paytm and the notable founders of the ecosystem, they decided of coming together and launching their own marketplace. I don't think I have seen any other updates since then, at least on this topic.
It's difficult. I mean, Google obviously has a crazy number of users, billion plus, right? I mean, more than that. In fact, what is it? I think couple of billion at least, I think, and it's the gateway to the internet for most people in the world. So you're not going to be able to compete against that, right? You may see curated marketplaces and so on in the future. Still, I mean, it's tough to compete against that 800-pound gorilla, right? It's tough to go up against the likes of Google or Apple on their core businesses as such. I mean, you can eat away at the edges and so on, but they still have a strong hold, I would.
So let's talk about GetVantage. They also raised funding last week on the tune of $26 million, and this was led by Viridium Next Gen FinTech Fund and DMI Sparkle Fund. There were also a couple of returning investors in this round, which included Chirate Ventures and Dream Incubator Japan. Combined with the $5 million of seed round which they had announced in 2020, the latest round has brought GetVantage's total funding till date to $40 million, and this also includes a couple of deadlines with leading NBFC partners to rapidly scale and finance the growth platform. There are companies like GetVantage, which are revenue-based financing platforms, which kind of like opening up a lot of alternate ways of raising funds. It's interesting how this might move ahead.
Yeah, for sure. I mean, we just said that India is extremely credit starved and trade finance especially, right? I mean, as an SME, for you to raise capital is really, really difficult, and cash flow is like the bloodline for all these businesses, right? Irrespective of whether you're a buyer or a seller or whatever you are. So yeah, I mean, these alternate forms of financing are certainly welcome. We've had the Upeka founders on the podcast earlier, and they do revenue-based financing for SaaS startups specifically, and they have a fund as well. So yeah, I mean, if you want to understand more about revenue-based financing, just check out the episode I did with Prasanna of Upeka sometime back. It covers pretty much all of the facets of that. Yeah.
Awesome. So moving on to the talk of town section. Roshan, you had mentioned this earlier as well, but I'll read the tweet. There's a lot of talk lately about the possibility of a prolonged financial downturn, which is reminiscent of 2008. And 2008 was a difficult time for many people. I don't want to say like how old you are, but you have sailed through 2008 recession, and now it seems like we're heading towards the next one. I think US is going to announce that it's in a formal state of recession very soon. If you were to compare these two time frames, what are the differences and what are the similarities?
So Chris Dixon is an amazing person on Twitter to follow, right? I mean, he is of course a noted investor and tech guy. See, the key point that he makes is that the product and financial cycles evolve almost independently, right? And he has graphs and statistics to prove that in that thread as well. That if you look at the kind of companies that got founded in 2008, 9, we are talking about Slack and Dropbox and so on, right? I mean, these are the folks that got founded that time, and that's a legit point that you make, right? Which is that we think that okay, in the case of a downturn, finances are dried up and startups are going to get killed and so on, right? Sure, of course, I mean, anyone seeking growth stage financing right now will have a really hard time, because I think in general risk capital dries up in these kind of scenarios. But I do feel that product and innovation doesn't stop, right? Arguably, I think it's easier today to start a business and to build a product than ever before, ever, right? We're talking about cloud and having like no code, low code, and all of this talent available as well, right? I mean, so it's easier today to start than ever before, and I don't buy it that capital is a constraint for someone to really start a business. It is a constraint to an extent, but I don't think it is as significant as people kind of make it out to be, right? That oh, funding dries up, matlab Indian startups will dry up as well. I don't think that's true. People who build will continue to build. The cycles may get a little longer, as Chris Dixon talks about in that thread as well, right? And he talks about how cloud and mobile was the 2008 2009 drivers, and he says web3 will perhaps be the driver in this cycle. We don't know, let's see what happens. I personally feel that SaaS has way more to do, and you're looking at SaaS companies being relatively better than some of the other startup, your typical consumer internet startup or whatever, right? If you're going to spend a shit ton of money on sales and marketing and not care about unit economics, irrespective of what business you run, I mean, you're going to be in a soup, right? And even SaaS businesses, which typically have very, very healthy margins, right? 60-70% margins. Even those kind of businesses, if you look at some of the larger guys, they're not profitable yet, right? Even at $1 billion plus revenue. Maybe it's a matter of strategy, I suppose. I don't know. But I feel like SaaS businesses are inherently sound in a unit economic sense of way. And there's still a lot of way to go for SaaS. We've often talked about, how less than 5 or 10% of the enterprise tech stack is SaaSified, right? We've talked about how SaaS and cloud has grown year on year at some 20% or something CAGR, which is insane. If you put those numbers together, then you're expecting, irrespective of what the financial cycles are, you're expecting 10, 15, 20 years of growth ahead. So definitely interesting times.
Okay, before wrapping up, let's talk about the upcoming episodes that we have lined up. I think last week we spoke with Pushkar, who's the founder of Drip Capital, and this week we'll be speaking to the senior director of go-to-market of Six Sense, Anupreet Singh. So, what are some of the things you'll be talking about with us?
Yeah, this conversation with Pushkar almost has become like the next Guns N' Roses album that never came. But I can assure you that, this week for sure we'll put out the episode with Pushkar. It was a fun chat. We spoke about the credit landscape and how they're building in this sector. A very interesting conversation and excellent founder as well. So after a long while, we're going to have an operator on the podcast. Anupreet was with Slintel earlier, which got acquired by Six Sense, and he's one of those folks who has sort of perfected this sell from India to the US sales motion, right? And he has more than a few great insights on how to build your inside sales team, how to scale that, and how to sell cross geography as well, right? So for those who are interested in scaling sales and marketing, I think it will be like a very interesting episode to check out. Let me know if you have any questions for him, that anything that you guys would like us to cover, we can kind of talk about that on the podcast.
Yeah, you can send us your questions through our LinkedIn and Twitter accounts. On LinkedIn, we are the Startup Operator, and on Twitter, you can find us at Operator Startup. Along with that, in the description, you can find a WhatsApp subscription link through which we send out regular updates on upcoming episodes and people will be having on the podcast. And of course, folks, if you enjoyed the conversation, do consider subscribing to the channel on your favorite podcast platform and drop a like on YouTube so that more people like you can discover our content. If you know ways on how we can improve, do share that feedback with us.
Just one other request before you guys leave. It's very important for you to rate and review us if you like our content. More people tend to discover podcasts organically on all of these different platforms. If that happens, humble request for you guys to review us and rate us on Spotify, Apple, and any other platforms that you listen to.
So, yeah, that's all for this week, folks. See you again next Sunday.
See you guys. May the force be with you.